Hey, it's Tom here and welcome back to the channel. Now, a couple of months ago, I had the absolute privilege of sitting down and recording a podcast episode with Spier. In that podcast episode, we covered a broad range of topics and it's been the best performing podcast episode that I've recorded to date. So if you haven't seen that podcast already, it's always linked down in the description below, or there's always links to the podcast channel down in the description below. So definitely head over and check that out. I try to release sort of 1 to 2 podcast episodes per month. So I really appreciate the support on that particular episode as well as the podcast channel more broadly. So since late last year, I've added video versions of that podcast. There's a separate YouTube channel for the Investing with Tom podcast. So any support in that area is appreciated for sure. But in that conversation with Spier, I put a question to Guy, which I think initially came from Jason on the After Dinner Investor channel. And he was basically asking, has Spier ever made a 50% bet in his portfolio, a massive allocation to one particular company? And the answer that we got from Guy in that episode really genuinely changed my perspective on how I think about a couple of things to do with portfolio allocation. So in this video, I want to roll a couple of short clips from that interview with Guy and then kind of explain how I, think about things a little differently than I did only a couple of months ago, kind of before that interview. So if you enjoyed this video, definitely hit like and also subscribe to the channel if you are new here. But without further ado, let's roll this first clip from Spier.
Yeah, I have never made a 50% bet. And here's where you really have to be careful if you're kind of asking many people this question, is that, it's easy enough for me to open up a brokerage account, put $1,000 in it, and then put $750 into one stock and say, I've had a 75% allocation. Yeah. What you really want to know is what percentage of your net worth have you put into it? And, is this, does the person have net worth in the first place? Because if you have zero net worth and you're just taking a flyer and it doesn't matter, but if you, so the first thing to say is that Aquamarine Fund is 100%, or effectively, now I've taken some money out to buy a couple of homes, but it's the vast majority of my net worth. I don't have other portfolios, positions, anything like that. So just be careful when you ask that question to people, what they're referring to. And what I would also tell you is that many people, I think, will not answer honestly, or they genuinely have not done the accounting properly in their head. So they may not be intentionally misleading you, but they just haven't thought it through. And, compartmentalized financial thinking is a very, very real thing. People think in terms of, so just be really careful when you hear people say that. So
now, Guy's thoughts here on sort of portfolio allocation and how to best kind of quantify how much money you have in a particular stock is something that I have really genuinely changed my view on kind of after hearing that answer from Guy. Previously, when people would ask me, what percentage do you have invested in X company in your portfolio, I would tell them, 5, 10, 20%, whatever the answer was. But I was really only thinking about that in just my stock market portfolio context. And for me, I do have a decent amount of my net worth outside of the stock market. So, we're looking to buy a house at the moment. So I have a house deposit, I have retirement accounts, I have additional cash that is not invested in stocks that could be. I consistently have income and savings kind of, or income coming in and more savings building up. So, if I invest, say, 10% at cost into a particular stock, that will kind of get watered down over time just as kind of new money flows in. And in the grand scheme of things, I'm still in a reasonably early stage in terms of building my portfolio. I'm 27 years old and plan to be investing new money into stocks and, cash producing assets for a long period of time yet. So that's definitely something that I think I was guilty of. I was maybe perhaps overstating how exposed I am to particular companies, and that's something that I have genuinely changed. So now anytime that someone asks me how much, I have in a particular stock or whatever it might be, and this has happened on Punchcard a couple of times, for example, in recent live streams, I try to give them an answer in terms of percentage of net worth. Like I mentioned in the video, I think that is a far more kind of meaningful number. If you have a overwhelming proportion of your net worth in real estate, for example, and then you have like 1% of your net worth in a particular individual stock, but it happens to be like 20% of your portfolio because you don't have much money in stocks, I think understanding that 1% allocation of your net worth is far, far more meaningful than, some huge allocation of a very small stock portfolio. So I think for me, kind of moving forward, eventually I will kind of end up in a position, particularly, after I've purchased a home and so on, hopefully some point soon, I think I will probably end up in a position where when I am in a state of being fully invested, no kind of surplus cash sitting on the sidelines or anything like that, I may have a handful of, just for argument's sake, kind of 10% of net worth investments in the stock market. Maybe I have 6 or 7 companies or something in my portfolio. Obviously that will vary for each individual person, but let's just say for argument's sake I might have 6 or 7 kind of 10% of net worth positions in my portfolio in the stock market. I may be fully invested at that point, so I might have 6 or 7 10% positions. That only, of course, adds up to 60 or 70%. So, the rest of the sort of portfolio allocation or rest of my net worth would therefore be outside of the stock market. And I think that's just a more kind of holistic way to view it. Gives you a better picture of where I truly stand in terms of allocation towards a particular position. And in many ways, that's actually made me a little more comfortable with having, larger bets. That might sound a little counterintuitive, but previously, I was putting things in sort of a percentage of portfolio allocation kind of mindset. Now that I expand that out to sort of a percentage of net worth kind of mindset, a 10% allocation is going to be a much larger number than it was before when I was just speaking about, kind of stock portfolio money only. So let me know your thoughts down in the comment section below on this concept. I don't think it's by any means the norm in terms of talking about allocations to particular investments, but I think it's a much more meaningful way to go and a much more relatable way for me to explain an allocation percentage to the people watching these videos, for example. So definitely let me know your thoughts on that one. And for now, let's roll a second clip from Guy Spier, again around portfolio allocation, and I'll give you my thoughts on what Guy had to say.
I've had a number of times now when I've invested in something that's gone down 50% and it hasn't bothered me in the slightest. And I just keep track of, I might add to it. But it is a very dangerous place when you've made something 5, 6, 7, 10% and it's declining, and then you want to add more, and suddenly you've poured half your portfolio into one stock, and maybe your judgment was wrong. So, keeping that kind of mental balance and finding ways to keep your mental balance, and it's kind of a visual way of thinking about it, Tom, for me that somehow works. I don't know why. Is that when the position is kind of like up to 5%. Kind of a 1% position I feel like is down below me in size. Then a 5% position is sort of coming up to my waist, so to speak. And then a 10% is above my head. And I don't want positions above my head. I want them kind of down there. When I put 1 or 2% of the portfolio into Alibaba and it goes down 50%, I am just not bothered. And I know that I ought not to be bothered if I'd allocated 20% of my portfolio to it and it went down by 50%, but it would bother me. And so that's me managing my own psychology.
So in that second clip, as you saw, Guy Spier now turns to speaking a little more about what sort of portfolio allocations he's personally comfortable with. And in that podcast, I believe he said 5% at cost is kind of the limit where he sort of feels comfortable. And I want to kind of give my view on that, because I think there are a couple of factors for me personally that, where I feel a little more comfortable with larger positions at cost, I would say. Perhaps it's because I, haven't been burnt and had positions go to zero or something, and I'm just more comfortable kind of swinging a little larger at positions. Maybe that's part of the equation here. But I think there are a couple of kind of genuine, structural things with my investments that allow me to be comfortable with taking larger positions. And I guess trying to stick with Guy Spier's analogy of trying to keep, the water below his knees at a comfortable level with investing a certain amount of capital in an individual company, I think I have a couple of things that might change kind of the tidal flow of my portfolio, I suppose, trying to keep this, water below the knees analogy going. So, like I've already mentioned in the video, I'm still in a relatively early stage of building my portfolio, all things considered, and I do have kind of new money coming into the portfolio on a regular basis. So for that reason, I think it allows me to perhaps, at cost have larger positions than I would if I was managing a fixed kind of dollar portfolio. So, for example, maybe I invest in a business and, in terms of where the water is up to on my body, hopefully it's not up above my head, but maybe I'm comfortable having that water at my waist or at my belly button, or if I bet really big, maybe it's kind of up to slightly below my chest or something. I'm reasonably comfortable with having investments at cost get up to that level initially, because I know that at least right now I'm going to have new cash kind of come into the portfolio over time, and that will kind of naturally take the tide out and decrease that sort of water level over time. So that equation is definitely different, of course, if you're managing a fixed pool of capital like I believe Guy Spier is. Obviously he will have some income from fees that he generates in running his business, running his fund, but to a large extent he's managing sort of a fixed pool of capital for his investors. So that is probably a slightly different view than that he has to take compared to someone like me who's relatively early in building the portfolio, has regular income coming in, and those regular sort of annual savings that are coming in do still genuinely move the needle quite significantly for me in terms of pushing my net worth and portfolio size up. Now, the second and kind of final bit I got out of that second clip from Guy Spier is actually something that I'm going to be adding to my investment checklist. So if you haven't seen it already, I put up a video, I think late last year it was, basically going through my current investment checklist. It's a reasonably new addition to my process, but already it has been very useful in slowing me down a little and potentially avoiding some kind of dumb errors that I might have already made in the past. And this conversation about water up to your knees or above your head and all that sort of thing, if you commit too large amount of money initially, has really got me thinking about, like I say, adding a new point to that checklist. And that point that I'm basically going to be adding to the checklist, and the percentage I've chosen here is kind of just an arbitrary number, but it should allow me to, think through how I'm feeling about the position. That new checklist item basically is, would a 5% position in this company feel above my waist? And maybe I'll change it to above my knees. I'm not quite sure just yet. I will add it to the checklist very shortly. But basically, I think this kind of comfort level is probably going to vary quite a bit with individual positions and the specific kind of situation in which you're investing. I could imagine if I were to have a large chunk of money in Berkshire Hathaway, honestly, I would probably feel comfortable having like half of my net worth or something in Berkshire. That would probably be at my waist or something if I'd have half my net worth in Berkshire, and I think I could sleep pretty well at night being in a company that is that durable long term and that has like $150 billion in cash or something. It's pretty hard to go bankrupt when you have that much kind of surplus cash relative to your liabilities, right? So with a company like Berkshire, I'd probably feel pretty comfortable having a massive allocation to that position. But if it was a more speculative company, I try not to do a lot of speculating in my portfolio, if any, really. I try to avoid these like hyper growth, non-profitable companies, unless it's some sort of special situation like Seritage is in my portfolio, for example, which is not profitable, but you have kind of this margin of safety from price versus net asset value and so on. But if I were to invest in one of these really speculative companies, I imagine that I would be very, very uncomfortable having like half of my net worth. That would be way over my head, and I'd be, trying to like swim to the top or something, swim to the surface. So I think it probably will vary by position. So a new checklist item that I'm going to add to, my process is, like I say, does a 5% position at cost feel above my knees? And if it does feel above my knees, it probably means that either one, it deserves a smaller percentage allocation to the portfolio, Or two, maybe I just don't know enough about that company yet and I haven't researched it thoroughly enough to kind of get comfortable with the full investment thesis. So those are a couple of updates on my personal thinking on portfolio allocation and some of the ways in which Spier has kind of changed how I think about that. Definitely keen to hear your thoughts down in the comments below if you have a similar perspective to where I'm kind of getting to at this point, or whether you still kind of view things in terms of a percentage of portfolio or stock portfolio on a particular company and that sort of thing. I think it's a really interesting topic. So like I say, if you want to check out the podcast channel or specifically the interview with Guy, both of those things will be linked down in the description below. But that's it from me for this one, and I will see you in the next video. Cheers.